Hello and welcome to my UK stock market portfolio review. It has been a while since we've done one of these, so yeah, we're going to go through my UK stock market portfolio and see how it's doing. And as always, I will do my US one separately in a few days' time. But yeah, it's been a while since we've done one of these. We used to do this every month on the channel, but as you guys know, if you follow the channel, unfortunately the views just kept dipping and dipping, and it just got to the point where it just didn't justify doing it every month, which is a little bit of a shame because I think it's really good that you guys can, track along with my portfolio month by month to see how every stock's going. Gives some transparency as well of what I own, how much I'm up on positions, how much I'm down on positions, and I'm not one of these channels that just talks about a stock and then never talks about it again and just secretly sells it in the background. Every investment I make, you can track on here, and the portfolio series has been going for a long time as well, so you can pretty much track my portfolio for like the last kind of 4, 5, 6 years maybe, I think it is now, since I've been doing this. So yeah, I think it's really good from the transparency point of view. So yeah, as you guys probably know, I went, unfortunately, I want to carry on doing this series. It's good for transparency, it's good for you guys to track along, but unfortunately it just got to the point of view where the views just didn't justify doing it anymore. So unfortunately now we have gone down to every 3 months we do the stock market portfolio, and this is the first 3 months since then, and we can have a little bit of an update on how everything's going, and then I will update it again in 3 months time for you guys on the YouTube channel. If the views are not good again, I might move it back to every 6 months, but I don't really want to do that. I want to at least keep it on every 3 months. And if you are on the Patreon, which if you want to join, the link is in the description, I do still do the monthly update on the Patreon. So what happens at the moment is I go YouTube video and then it goes on Patreon so Patreon will be November, Patreon will be December, and then it will be back on the YouTube on January. So if you want to kind of watch the in-between months, you can do that, but it's on Patreon only, exclusive content. If otherwise you have to wait the 3 months. If you want to keep up to it more regular, then the Patreon is the place to be. But yeah, we'll get stuck on my UK stock market portfolio. I will do my US one maybe in a week or two, just to break it up a little bit. But yeah, we'll go through this one and see how everything's going. So yeah, everything in the UK portfolio is actually going very well. I'm very happy how everything's going. I'll try to spend a minute on every company. I'll try not to miss any out, and we'll start with the top one. So the top one is 888 Casinos. So 88 Casinos makes up just an average position really in the stock market portfolio. Pays a little bit of a dividend, but yeah, it's absolutely smashed it. We're up. It's the only 200% member in the stock market portfolio. So yeah, very happy. 200%. That's fantastic. Not much else I can say about that. They have recently bought William Hill, which I'm still undecided how much I like that purchase. It has crossed my mind a few times to think, is it time to kind of move away from this one? Because I think, keeping like physical locations is not really for me. The reason why I got into 888 is because of its US growth and its online base, rather than being an actual brick and mortar store. So yeah, not sure how I exactly feel about that purchase at the moment. Still a little bit undecided. So we'll see what happens with that one, but can't complain about the actual returns. 200% is fantastic. Next up, a dividend stock. So quite often what you won't see me do is in the US stock market portfolio, I don't buy too many dividend stocks. But in the UK portfolio, especially because the UK scene, we generally don't have too many growth UK stocks, I guess, or quality UK growth stocks. So the more places that you do go to is the dividend companies, and Airtel Africa is that. It's a dividend company. So I do get a lovely dividend off it. I can't remember exact yield. I think it's something like I get around about 5 to 6% yield on it, which is fantastic. But as well as that, I think the share price was massively undervalued when I started buying this one. And yeah, it's kind of turned out that way. I've got a 47% gain on the share price, which is fantastic, especially as a dividend stock. And then obviously as well, I'll collect a very good yield from this one every year as well. So yeah, the very good performer in the portfolio at the moment. It's a great company. I'm very happy with that one. A little bit guilty of not actually probably buying that one a little bit more, which I should have done. There was a few times that I actually had a bit of a dip in the share price with an insider selling, and I probably should have capitalised on that a bit more than what I did. So yeah. Next up, Asos, the new UK company into the portfolio, the newest one into the portfolio. It's currently down 9% as it's been on an awful downtrend, but I have started building a Asos position. You'll see it's kind of an average size right now, and if it kind of stays here longer, or if it goes down even more, then you could see that Asos position size get a little bit bigger from here. So that's everything where I'm at with Asos at the moment. Next up, Barrack Development. So Barrack Development's up 26% on this one. This has actually been one of the worst performers recently in the stock market portfolio for the UK scene. It was a stock that I think I was up 40% on. Once again, this is like an Airtel play. I just wanted a little bit of share price gain, which I had, which has come down a little bit, but mostly for that dividend yield that I get on that one. So yeah, that's mostly what I'm playing it as, is a bit more of a dividend stock. You'll see that I actually have tail wimpy as well in here when I get around to it. I have considered, now I've got another new position in the portfolio, I just want to make sure that I don't get too many positions in here. So I am kind of considering selling either Taylor Wimpey or Barrack Development, just to kind of, because I've got two house builds in here. So yeah, I am kind of looking at maybe getting rid of one of them. The only problem is that I should have got rid of one of them probably like last month when they were both up like 40+%ish. So yeah, that's the only thing that's kind of stopping me from actually selling one of them right now. But still happy to hold them, great companies. Next up, Boohoo. So this has been probably the biggest change in the portfolio. What you will see, especially if you're on the Patreon and you keep up with more of the monthly updates, is you'll see how much bigger that has got over the last week with the dip that we've had. There was quite a big increase in that one. Obviously, as well, is that this was a company that I think we took really good profit off it, and we were up like 50% on that one. And even on the last Patreon update that we did, that Boohoo position was up 15%, and it's had a massive fall off this last month. So yeah, it's used to be my biggest position until S4 Capital came along, and I am looking at that one now, considering potentially taking over S4 Capital. So something that I'm kind of watching at the moment, but I won't spend too much on Boohoo because I've done a massive 23-minute video on it already last week. Next up, the worst performing stock in the portfolio, which is best of the best, or worst of the worst is the nickname it has now. So yeah, this has been the worst performing stock in the portfolio. It's down 65%. Bit of a strange one really with best of the best. I don't believe it deserves to be trading as low as it is doing. It is very cheap right now. Obviously what has happened is the revenue growth has slowed down, which we knew was going to happen. I can't stress that anymore. We knew the revenue was going to slow down because it benefited from the CV situation. And the profit has been hurt on it because what has happened is advertising costs have gone up a lot. Now, at some point that advertising costs hopefully levels out and then the company goes back to how it's performing. But yeah, I think we knew that it was going to have a correction. I feel like the correction has been overdone. And yeah, at the moment I'm happy with my best position size. I'm not panic selling. I think it will recover. I think it is oversold right now. Potentially for me, I could buy more. The only thing is I want to make sure I get a trading update, because what will happen is if the revenue is still slowing down or the profit is still they are still leaning into profit, then it will go lower. That's what I'm just being careful of. But even though I am down on this one at the moment, I am not panicking. This is still a very new stock for me. I've only been in this stock for 4 or 5 months. So yeah, when I'm considering this is a long-term dividend play with some share price appreciation, I still have confidence I will do okay on this position in the next 2 to 5 years. Next up, Kickbox. Probably should start building more. The only problem is I want to kind of build Kickbox when I'm not up on it. I'm up 4% on it, and same again, a bit of a value play, a bit of a dividend play, and I want to kind of build that position, but I want to be down on that position a bit more. I want it to be a bit like an Asos where I'm down 9% and build it, not when I'm up. So yeah, I'm just kind of just there at the moment with that one. It's not really going anywhere. Next up, Card Factory. So Card Factory has actually had a rough kind of 3-4 months-ish. This was actually a stock that I was up, I think, over about 100% on. And yeah, recently it just keeps giving it back slowly. And I'm actually considering maybe buying some more. The only problem is it's just a bit of a high risk play because of the balance sheet it has. But it just did a recent earnings update, pretty solid from that point of view. And yeah, I just think it's a company that will do okay going forward. As soon as it gets that Christmas sales in the company as well, it should be fine. So yeah, Card Factory is one that I'm considering adding into, and it's definitely had a bit of a pullback the last kind of few months. Jet2, once again, this was actually a 100% member at one point. Obviously, it's pulled back a little bit because there's the worry about, it's lost its summer trade, pressure of the CV situation, how bad is it going to be, is it going to carry on? So yeah, it's just kind of been stagnant really for the last kind of couple of months, I would say. But yeah, I'm just happy to keep on holding that one at the moment. Next up, Greggs. So I'm up 105% on Greggs. It is a 100% member. And to be honest with you, there is pretty much, I would say probably once every couple of days I do consider selling Greggs at the moment. I do think, I look at it and I think, what expansion does it have left? The valuation it's at, the run it's been on. Yeah, Greggs is one that I do consider selling nearly every single day, but I do think it's still a very good company. No debt, it grows at 10%, it's got good profit, it's got a good dividend that's going to come back. So yeah, I'm not sure on that one. That is one that I'm thinking on, but as far as the performance side of it, it's done fantastic. Hollywood Ball, 51%. I'm really excited for their trading update, which is coming up at the end of the month from here. Hotel Chocolate, steadily starting to tick up a little bit. It was supposed to have its trading update last week, but it's moved it back now to this week. So yeah, it'd be good to see how everything's going on there, but doing okay at the moment. I probably could buy a little bit more Hotel Chocolate, but I'm just kind of saving that in case it just has a bit more, one more dip to buy that, I guess. JD Sports up 89%. This was actually up 100% until the Boohoo and Asos kind of negativity came around. So this was actually 100% club member, has pulled back recently, but still happy to hold that one. We've got Legal General, same again, dividend play, but got a good share price appreciation of 40% on that one. National Express, very much like a Jet2, a lot of uncertainty around travel and all that, but still doing very well, up 88%. Once again, this used to be a 100% member as well, so you can tell there's been a bit of a pullback really on the UK scene at the moment. And then S4 Capital, my biggest position, just smashing it, 75% up on that one, and I mean that's. It's fantastic. It's done very well. I think, when I invested in S4 Capital, when I looked at it and I thought it's undervalued, it's a great company, and it was downtrending at the time. I was down on the position, and I thought, what, by the end of the year, I can see these guys turning it around and smashing it, but the financials that they've produced has been unbelievable, and I thought by the end of the year, maybe I'm up on this one, 20-30% on this one. Never thought I'd be up this much, so it's even outperformed my expectations on the share price point of view and financially. And then Taylor Wimpey, up 22%, very much like Barrack Developments really. Had a bit of a pullback recently, considering maybe selling one of these, so we'll see what happens there. But overall, that is my UK stock market portfolio. Overall, I'm very happy. I'm happy with every position size. I'm happy with every company in here, and yeah, it's going better than what I could ask for it. The share price performance from a lot of the stocks that have been in the longer term now have performed amazing. We've got a 200% member there. We've got Jet2 that was, nearly 100% member in that one. Greggs, Hollywood Ball's pretty good at 51%, but JD Sports, National Express, S4 Capital. Card Factory, what used to be up there, but unfortunately has had a bit of a pullback recently. But we've had six stocks that are pretty much 100% members in the portfolio, and that's not including any of the profit that we've taken as well over the last kind of 12 months as well, which there's been a bit of profit taken. So yeah, fantastic. Really, really happy with the stock market portfolio, and very happy with the gains as well in it. It's been good, and I'm sure some of you guys that maybe have been tracking along with this portfolio as well have seen the progress, and maybe some of you guys have one or two of these companies as well that have done very well over the last couple of months as well. And it's good to see a lot of the longer term investments performing. That's the great thing when you buy and hold great companies, they will perform. And you can see here there's like the new stocks coming in as well, which hopefully will be the next good performers over the next kind of 12-25 months as well. So yeah, hope the video was useful anyway. Hit the like button if you are new, subscribe. I will do my US stock market portfolio in a few days time, but until then I will see you on the next video.